Hey guys, Sports Master PK Force. Welcome to the weekly technicals for September 11th to September 15th of 2017 for the yen complex. The yen has just been a complete downward disaster. There's just no point sugarcoating the fact that we broke a very, very key support area here at 108 today. However, as I've been saying in the earlier videos, there is a small but not unreasonable chance that a lot of the negative sentiment against the dollar could be overdone, at least in the very near term, especially if the hurricane hit is not as bad as everybody thinks it is. One of the primary, I think, fears in the market right now is that the double whammy of the two hurricanes almost completely and totally invalidates the idea of a Fed rate hike in December. If the economic impact from Irma is not nearly as severe as the market anticipates, you could have a chance for a relief rally, a rise in U.S. yields, and in turn, potentially some sort of a move back up. Still, when you look at it technically here, the yen story is just downtroddenly negative. You have a series of lower highs continuously and a series now of lower lows, although we today could make an argument, made a tiny little spike bottom over here at this level, and you could still make the argument here that this 107.50 represents a possible lower high double bottom in the trade. Overall, though, if we look back on a longer term basis, there really is no support in the yen here until, let's go to the weekly chart, until we go all the way out into like the 106 area. So there's still maybe about 150 points worth of trade to the downside before you can make a legitimate case that the yen is going to find some modicum of support. And this is a weekly chart, and you can see the yen looks just absolutely horrid on a downside chart. So is there a chance here for a pop-up rally? Absolutely. Where's the resistance points now? Certainly 109, certainly 110 hardcore. 110 becomes like a cement ceiling for the yen trade here. And a break above 110 would really signal, in my opinion, a much longer term bottoming out formation of the yen. Until that point, as a matter of fact, I think you could make a relatively safe argument that every rally to 110 is a short. So any kind of a bounce back, even though it's tempting here to kind of pick the bottom and get underneath this pair right now, a smarter trade may just simply be willing to short any rally that you see here, because a V-shaped recovery is highly unlikely unless you have just sort of a unbelievable combination of good luck events where the hurricane doesn't do any damage, the tax relief is possible, and U.S. economy picks up steam into the second half of the year. Those are three very unlikely events to happen contemporaneously as we go forward. So if you look at the yen complex, though, there are really some very, very different divergences on the trade here. If you look at the pound yen, for example, clearly a trade that trades much better. In other words, my opinion actually is that if we're looking for a turn in the yen, or turn in risk aversion, probably a much better way to trade this would be through the pound yen trade than through the dollar yen. And I wouldn't want to be picking a bottom in dollar yen, but pound yen looks much more substantial. And actually, from a technical point of view, looks terrific because you have a series of higher lows here and a much higher low over here, and certainly ready for potential move to the upside here towards the 145. That's probably the strongest yen cross that you're going to be able to find. Euro yen looks like a disaster that it is. Really doesn't show a lot of strength here. Although it's it's not even so much a disaster, it's just sort of a no man's land. It's been a no man's trade between 28 and 30 for a good 3 months. It's really not been a trade, and therefore of very little interest to anybody who wants to look for positional ideas. On the COM dollar side, the carry trades, both the Aussie yen looks neutral right now. Kiwi yen looks negative, but bottoming out here too. Again, this is not a great technical formation you want to buy, but if you're going to be picking bottoms here, you could just take a blind dive with a 76.50 stop, hoping that you're going to make a higher low here. None of these charts look very enticing from the long side, and in fact, still continue to be looking pretty good on the short side. CAD yen may look a little bit better because of the strength in the CAD, and CAD yen definitely looks a little bit better. But still, to me, if I'm going to be picking the yen crosses, the one yen cross that I would want to go long on right now, would be the pound yen, because that's by far has the healthiest, best looking technical formation. Nice strong bottom, coiled move this week with a potential to the upside. Now, my argument here, I guess, is that if the dollar does recover, it's going to pop dollar yen, but pound dollar is going to stay relatively stationary at these levels, and that's going to provide a very nice boost for anybody who's long pound yen.